Jeez, apologies, getting here a little late. Had something come up this morning. Haven't looked at all actually at the chart, so you'll kind of see how I go about creating a little plan. Let's see. So we've cleared 1-2 sell side liquidity. We have inside of 15-minute, which is also an old low that we were using yesterday. Okay. New week opening gap, 1 hour. Midpoint, interesting. 15.5. So I'm just kind of aligning up PD arrays that I'm seeing at the moment underneath new week opening gap, but we have these discounts. First, we have equilibrium of the hourly fair value gap, right? Consequent encroachment, which is aligned with the 15-minute and an old liquidity pool. Only thing causing me hesitation on this higher time frame is the fact that we've closed underneath the new week opening gap, and we could potentially be using that as resistance now. So as I work down through time frames, right, we've respected a 5-minute fair value gap. Untouched 2-minute. Okay, interesting. So I cleared. Breaker block. Okay, bearishly. Midnight open now coming into play. So I'm thinking 1, 2. Pretty shallow run. I honestly am leaning towards these lows, I think. I was thinking we would run higher, finding support here, but right on the 1 minute we have the midnight, we have this breaker. We've actually hit that. You could tell the new week opening gap as well, right? It's kind of holding us. At the moment, however, we have sell side here, equal lows. We've shallowly ran, but in reality, we would still have liquidity here. This is yesterday's liquidity, right? Those levels are kind of important. Which is why I have it up. But actually, I can just kind of delete that. The 1 hour fair value gap, the consequent encroachment, is also that level. So we kind of are remembering that, right? I have it on another screen here. But you can see we're really just getting sandwiched between PD arrays at the moment. Need to see whether or not, right, we want to break lows, or if we want to break through this high. Like if we were to break this swing point here, especially this one, and aggressively close above the midnight, right, closing above new week opening gap as well. I'd kind of look for this new week opening gap here to be used. So maybe use them both. But as long as we remain under it, volume imbalance, volume imbalance. Gee, let's see. 1, 2, 3, 4, 5. So 9 volume imbalances in the last, what is that? 15 minutes. So over half, 75% of the candles have opened with the volume imbalance. Right, you can really see how we distribution back to that consolidation, expansion, consolidation, FOMC, really kind of the typical, right, what we would expect to see. So quick one-sided direction, usually the false move. Second stage events, returns to clear out. Oh no, Alright, so I'm lying there. Equal highs, actually. So possible we'll revisit that later. But that's right if we can get above this. As of now, we have a lot of lows building up here now. But I could definitely see a run through these lows one more time. Yeah, I like to go the last 2 months. Right, and I've kind of shown, if you are a little new, I can run through it again. What I have is, oh, now they're all the way gone. Right, so I have different folders of objects. And then what I do, right, is I have them all kind of set into certain folders. So if I wanted to hide a month's new week opening gaps, I could do that. Right, make it clearer. If I want them back, same thing. But yeah, I usually go about 2 months, so 8 weeks, sometimes 9 or 10. If price is showing, right, if we're like, say we're 10 weeks out, 9 weeks out, so a little farther out, but price is showing that it's using those new week opening gap levels, then I'll still continue to use them. Okay, there's that. So we'll want to see, do we accelerate quickly through, closing underneath? Right, if we do, my intention would go back to probably this swing low, or at least this candle for sure. Oh, we've actually hit that. So we do, chill out. We did close under that. Which would make me think that we want to actually continue lower if we're going to close underneath this. Especially, let's say we leave a fair value gap within here somewhere. That makes this. And that's a volume imbalance. Yeah. We might continue. Let's see, hourly swing low. So that 1 hour fair value gap has actually been breached. This is equilibrium, right? The consequent encroachment of that fair value gap. We've closed underneath, which kind of aligns with the 1 minute structure. Closing underneath the fair value gap, new fair value gap left. So honestly, I would expect this fair value gap to hold us. Like if we're gonna run lower, this fair value gap here should hold. Especially because I'm kind of seeing, let me remove these lines. Like in my mind, right, this low, when we retrade back up into this high of this new week opening gap and then go up, down, up, down, up, down, right, can really see this as a BPR, balanced price range. Which really means this low in itself should hold. So like if we were to come back above this and start playing around again, that makes me think we might actually more like consolidate around the new week opening gap. So create more consolidation rather than expand in a certain direction. Whoa. But on the flip side, if we are to aggressively break through this fair value gap again, we obviously do have 1, 2, 3 highs sitting here. Untouched fair value gap as well. Just opposing, right, inefficiencies and liquidity. So far though, if this low, right, you can see how this low is trying to hold. Bad things, it's a lot of bad things. Wishing I, wishing I, wishing I. That's nice. Right, we want to see acceleration through this low. Okay. Nice, 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 nice. Right, so I got short on that fair value gap there. And this is a swing low. I want 5 handles at least. If we can like close below this low, I'll let it rock hold. Stop's already above this swing high that I entered on, right? So I got in on that candle there. Ideally, we close under the low. I like the fact that we gap this. That's actually pretty nice, right? We create the volume balance there. I'd want to see this stay open. 5 handles would be a partial. Bad things, there's a lot of bad things. Alright, partial ran through there. Stop break even now at this point. Honestly, I'm going above the down close candle even. That created the volume imbalance. So this one here. And we have targets, right? We just traded into the 1 hour order block. So actually, if we can get to the low of the 15-minute fair value gap, which would be here. Right, so 15-minute fair value gap low. Oof, ran through. How many is that? That's 8. If we get 10, I'll close at 10. I'm just going to use my stop here. So at this point, stops above the volume imbalance, so I would want to see this be a breakaway. How we close within this will kind of be telling actually, right? Because this is a 15-minute I'm using. So if we actually close underneath, I'll be confident to hold. But if we close back inside, right, 22 seconds, so this candle will determine the 15-minute candle closure. So I could just use this 1 minute. If we close underneath, I'll let it rock, see if it wants to accelerate into a low. Like I mentioned, if we close inside of it, where is 10? 10 would be 44.67. Closing underneath is nice. I'll let it rock for now. So stop still here. I've already closed most of it under the low. All right, like, so what we would want to see, or at least what I would want to see, is this fair value gap hold. Because now the 15 has been closed underneath while the 15-minute here, right? So be inversion fair value gap, which means that if we start closing above the 15-minute, well, right, in my mind, so this one here in my mind holds more weight than even this 1 minute. So this 1 minute could hold us because it's overlapped. But if we were to get above the 15-minute inversion, then at that point, I'd be worried about returning into here. So I'd probably just close. But as long as order flow is bearish, right, it should respect the higher time frame fair value gap. The 15 might try to, yeah, I wouldn't even want to see it return that high, honestly. Closing underneath is nice. Shit, I mean, best case scenario, we don't even return into that either. Create 2 breakaway gaps here. That's how you know we're pretty heavy, really heavy. Which at that point, I would be pretty confident to hold into the potential low here. Or at least, what's consequent? Encroachment. At least until there. What's that? Just 12. So that's fine, not too worried about it. If we get higher. But yeah, we're good with that so far. Not a fan of that, the volume imbalance. This candle will be pretty helpful to me anyways. Like if hopefully, right, ideally we overtake that, close, reach for the low. Because this candle held that fair value gap, right? The body, so wick did damage, body held. Technically we open in here, but it depends on where we close. If we can close lower, still no candle body, we'll have closed inside the fair value gap. Would not want to see this new fair value gap, the 15, start offering support. Beautiful there. Ideally, we could accelerate through. Right, want acceleration through like this. Closing underneath, not a wick. At this point, stop is that this swing high. Because I really don't care if we... Volume imbalance. I'm going to add one there because my stop will save it. So stop loss is here. Well, what am I trying to say? No, brother, I'm not in the line. Cool. I'm going to take off the one. Okay, I'm going to take off one here. Because that's the original entry. And I'm going to leave this new entry we just added here. Because ideally, right, we're hitting, like I mentioned, the 1 hour wick. The consequent encroachment of this wick going to be important. If we can get underneath that, that'd be nice. Right, I'd like to hold. Okay, bet. Ideally, I would want to hold until the low. We created another bearish volume imbalance. Entry is safe because the candle remained open. I would want to see this hold. Stop loss is still here because we have a fair value gap here. Up close candle. 15-minute bang. Stop loss here. Original entry out here. Best case scenario, I mean, I really wanted that to stay open. I don't like that we did that at all. Open with a bearish though. So this bearish, let's see. Right, we can go back into the fair value gap. Expected. Yeah, we have our stop above this candle. So I'll just go like this. Because that's just the entry. 5 handles from that entry. That's all I'm really aiming for with that one. Let me see what the low is. I mean, come on now. 5 handles actually lines up exactly to the low. So yeah. I like seeing that a lot. But we would want to see this candle not close above the volume imbalance, to be honest. Wick into the fair value gap. Bearish volume imbalance. I don't like that we negated this bearish. We opened with another bearish. I would want to see basically what happened here. Open with a volume imbalance, run it lower into lows. Because now if we start using, right, technically we could say that this 1 minute volume imbalance has become inversed because we close above. But if we can negate that here, right, I'll give it kind of a one candle try. If we can get back underneath it, especially opening with that bearish volume imbalance, that'd be cool. Say we start using it as support, and even if this stays open, now we're a little more, right, sketched out, thinking that we may want to return higher. I mean, still we're closing. So I don't like that we use a support. We close right on it. The fair value gap, which is cool. This candle, right? It seems like we want to try to get under that. Like if we keep trying to and keep rejecting it, then we could start thinking that price wants to actually go higher, right? Because how many times would we try to get through it? I prefer we just keep running, hit that liquidity, get us out. Because we've opened on the 5 minute with a volume imbalance. So 2 minutes till that 5 minute candle closes, right? If the 5 minute can leave the volume imbalance open, obviously best case scenario for us. I like that that became that breakaway gap we were looking for. I like closing. Okay. I'm a fan of that. We could almost move the stop. Yeah, we're good. Basically risk-free. And because I had, right, the winners here that cover for this entry, the stop is a little larger than, like, say if I was just entering for the first time on this fair value gap, I'd have to have my stop tighter, right? Which is why I like kind of stacking positions here like this, because it can allow for a little more room with keeping the same basically risk. But that right there is not what we would want to see in the slightest, right? A complete negated volume imbalance here underneath. Let's see, the 5 minute in itself also looks to be overtaking. We'll let it rock. Hitting the 15. Oh, not that one. Ooh. Right, stop is above this because in reality, I would want the 15 minutes consequent encroachment to hold us. But seeing that, we might just close it. Closing above that. I'm just going to close it here. Oh, good timing. So I closed it before the stop. So a little bit above, what was that, like 3 handles? Yeah, about 3 handles. That's fine. Right, so this original short plays well. Delivers into, right, we took some off here because this is the 1 hour consequent encroachment of the wick, which if we're going to remain in this range from this high to this low, notice how we stop. I mean, come on now. Let me go. What is this one? So right near the top of this as well. But we're hitting the highest premium, rejecting into the lowest discount. Have you ever tried gold? Nah. Should we look at it? Imagine. But at this point, we might actually use that. We'll keep looking for shorts. What time is it? we'll run through the executions quick and then I'll take a look at gold. Just so you can kind of see. That's honestly, with how we were consolidating here, first trade was going to turtle soup it. But as soon as we close underneath, I know I'm wrong, right? So that's why I was okay doing this. Because the risk was, I mean, less than 2 handles. So I was trying to turtle soup the low. The fact that we close underneath the low and the fair value gap signifies that I'm offside. So I immediately reverse, right? As soon as we hit this low, I reversed it. Added again, of course, in the fair value gap. Partialed inside of this first inefficiency here. Right, that was about 5 handles from this entry. So 5 handle partial. Obviously, partialed again at the consequent encroachment of the wick. Tried to add at the volume imbalance, but as you saw, we manually closed as soon as this candle closed above this fair value gap. And now it actually looks like we might. I like that. Watch for that. If we're going to find support here. Yeah, there's that. Now you say take a look at gold. I feel like I had gold in here at some point. Damn, okay, B. But he's great, Uncle. That's nice, honestly, right there. How does it move on in 1 minute, though? I guess it's FOMC. I mean, I know a lot of people that trade gold and do it well, so it has to be working somehow. I would almost prefer trading it on higher time frames, low key, if I was. Like on a 15. Potentially we'll add it to the watch list. $5 minute and above. Yeah, that makes sense. He said, wow, that's bad data. Oh, was I looking at a bad chart? I'm weak. He said that's bad data. What ticker do you use? Or do you trade futures? Oh, gold futures. That makes sense. That's not too bad either. Yeah, that shit's clean. One minute. Off the inversion, 1 minute paired with. Shit will be juicy. Like this one here, that's what the high probability ones for sure right there. Into a low. Easy. Even the inversion though. That's pretty cool. Maybe we'll mess with it someday. If ES be acting whack like it does some days. We got I'm really trying to think. I'm like, what the hell is this? Okay. So we're actually still using this inversion. Like if I go to a 5. Right, we've got up into it a little bit. Actually, we could probably still run from here. Because we've just hit a 5 minute fair value gap. Consequent encroachment of the 15 minute inversion is still holding pretty well. And now, back underneath. Yeah, that looks more like a run here. Be interested to see if we get some type of fair value gap forming here. What's NQ up to? Running lows. Bump and run would be nice. We got short there. Right above the fair value gap. I just want this low, to be honest. I'm fine with that. Just a quick 1 to 2. Or actually, from where did I get in? I mean, that'll be 5 exactly, so I'm fine with taking them off there. That's cool with me. 5, bang. All right. So there's another 5 right there off the fair value gap forming. All right, we could run you through that one too. Which, I mean, that one seemed pretty obvious there. If we close underneath that, we might get heavy. We'll see. So if we, another fair value gap, might look for another re-entry, but. Right, obviously that one here is pretty obvious. Mitigation block. Intermediate swing high to the left, swing high to the right. This swing high rejects the 1 minute fair value gap. Accelerates through a volume imbalance and a swing low. Activating now a fair value gap perfectly aligned with the low. Right, so we were expecting a real quick reaction from here, which as you see, right, which is why we just went in quick. Stop us right above that fair value gap. It was more like 2 1/4. Just gave it room. But on things like this, right, I expect quick movement. So I really like that type of delivery. And 5 handles is good. I might add another one. We'll give it one more shot. Just one. Small risk here, half the risk. Damn, y'all getting out here. Full signals, chill out. But we're moving too quick to 55. This volume imbalance has to stay open now anyway, so. We'll see what happens. We'll let you know how that works. Okay, so right here, because it closed like this, but opened immediately with the bearish, this is kind of where I have to bend the rule just slightly, right? More of a... Because we didn't really necessarily get back above this candle's low. We did close the small one in, but I want to see if this bearish one can do anything here. So if we are to close the bearish one in, I'll actually just move the stop. I had it up here, but we'll move it just above this volume imbalance. So we'll cut the risk in half, basically. So I'll still give it some room, but I would not want to see this one kind of do what it's doing. Ideally, we hit this fair value gap and kind of reject, remain heavy. And these ones, right, higher risk, so go in with less risk, right, lower probability. These are kind of those continuation trades. And in reality, it's just really stacking another position. Because the original position was built here, right, added, obviously got stopped out, added here. So I'm just trying to see if we can't get a continuation of the trend. We open with another bearish. So at this point, yeah, I want to see if this fair value gap here can hold us, keep us heavy. Pulling up dollar. Haven't really used it in a while, but it looks like it wants to rip. So that'd be nice. Give a little dollar rip action. I don't like when we do things like this. Like open with that volume imbalance. As long as if we could still hold this, that'd be cool actually. I'd be fine with that, but I'd want to see this stay open for sure. Especially because notice where we created this one, right? It's not random. It's the exact same area that we tried to create the last one. Same exact, I mean exact. So that's why I'm saying this one here needs to stay open to give me an indication that price wants to run lower. All right, because we need to get to 44.53. 5 handles. Let me see if there's any swing lows. We've already smashed the hourly. What's on the daily? $4-hour. I mean, we got on the 4-hour. How far is that? No, that 8 wouldn't be bad. Stop loss is, all right, here's what we'll do. I was gonna try to partial. I'll partial one here at this. 550. I wonder what swing low this is though. Jeez. Oh, I can't go that far back. Rip. So what I'm gonna do is I'm gonna go stop above here. So I'm gonna cut the risk significantly right now. Because I would want to see this level hit here. Right, it's a 4-hour candlestick low. NASDAQ is dumping. We're actually hitting an inversion. Let me see where we are within that. So we're inside of an inversion 4-hour fair value gap right now. And right, you see these two levels. This is the consequent encroachment of that. That's where the swing low is. So what I'll do, I'll see if we can't reach into this if we want to. Right, see if we don't want to respect premiums. Like in all reality, I'd want this to be a breakaway gap. Okay, we'll see what happens here. So at this point, yeah, stop is just above this volume imbalance. Kind of like this level, basically. You could just imagine that there. Because although we can retrace, right? I'm kind of going off time. We're getting into the last 20 minutes. So if we have a target, I would prefer, with us kind of getting to a close here in power hour, we just accelerate towards that. Why don't you use the second charts anymore? No need, really. I mean, I guess we could, but I never paid for the super premium again because I stopped using it. I could always get it again. Or pro, I don't even know what levels there are again. There's different levels to it. I honestly found that it made me overtrade, if I'm being honest. So I'm going to take a partial there. Oh my gosh, I closed it all. Okay, well. That's tough. Damn. I think I might add one back. If we can hit this fair value gap again. Damn. That's actually tough though. My plan was the partial at 5 handles here. But I just closed the whole position, so. Michael vouches for it. I mean, yeah, definitely, if you know what you're doing, the second chart is nice. I can't pull it up, obviously, but like I said, everything, it just moves quicker. So it is nice. Maybe I'll get it and show you guys someday. Like, it's real nice in areas like here, because you can get those quick reversals from like areas like this. Like, I bet you within these little areas, there's probably a YouTube model that you could have capitalized on right within here and got like a crazy fair value gap in here on like a 2-second chart or something like that, 5-second. That's how you get those crazy sniper entries. But all right, we closed everything there. I guess that'll wrap up my day. So if we deliver into that, we'll hang out and see. But just gotta be content with enough. Fucked up on that one. Still a little clumsy with this for some reason. I know it hurts sometimes. So, original entry. Right, we already spoke about that. Obvious BPR. We understand once we close under that, we shouldn't return above the low. Right, lo and behold, we hold that low beautifully. Adding 2 here. Partial inside of an inefficiency. Equilibrium, consequent encroachment. Honestly, this would have been a nice re-entry, but we tried for the volume imbalance after partialing at the hourly wicks consequent encroachment. So I'll move that for now. Right, but we partial here. Re-add, manually close once we get above the 1 minute fair value gap. As we saw, we create now another reversal pattern. So we get in on that institutional order flow entry. Right, this is really the same thing that we see here. Just on a tinier frame. That's what I mean when I say if we had second time frames, we could like see it. But if you imagine, right, when we go lower here, all this time spent on the second time frame is just going up and down, much like it did here. So when we aggressively break through the low, this candle's swing low, just like this candle's swing low. It's all fractalized. We're expecting the same reaction. Right, so we're here, we get 1, 2, 3, 4 candles. If we went to a 5-second chart, there'd be 1, 2, 3, 4 candles right in here. It just all happens a lot quicker, which is why you kind of got to anticipate it. All right, we do anticipate that, so we are able to catch that, sell it, the actual liquidity low, add again, volume imbalance. Right, I added again at the fair value gap here, expecting price to run into this low, which I could probably still see that, right? But as you saw, accidentally closed the whole position at the partial area. So just clumsy hands, but that's fine. We could watch and see how this plays out. Right, we would have wanted to see, obviously my stop was just above this candle swing high. So when we respected this, close underneath, stop was moved and we would look for something like this with a 5 handle partial. We'll see how that plays out. Heading into the last, right, at 350, we often see that volatility injection. Swing high? No. No need, no need. Just let it rock. In this type of delivery, I really just expect up close candles to hold. So like I'm not looking at anything specific but the up close candles. Like I would look at like these candles here. I would just want to see up close candles hold if we're going to continue to deliver lower. What if I hate you? I'm pissed we only got 1, 2. I could have had 3. If that would have been the swing high, dang. Could have had 4 swing highs caught today. Caught a swing low though, at least. 1, 2 swing lows. 3 swing lows. So clean charts. And this would be target, or what does Michael say? Terminus. What if I had the position on still fully out here? Waiting for 350 to maybe give us some type of acceleration. Above this high, we'd have been out. Why no pressure, no pressure? Why you do me wrong? So I think I would have. Oh, yep, we would have been out there. Beep. It's like YouTube model setup. Short-term low cleared. Market structure shift. No fair value gap, but consecutive down close candles. OB. Pink. Is it 350? Oh, that was the 350 candle too. Okay. See how this candle reacts to this level here. Like if you're expecting something like this to hold, you'd want to see threshold be respected pretty aggressively, like this, right? When we smash it, we kind of react quickly. Same here. So if you saw a candle trade into that, you'd want to see kind of a quick reaction away. And honestly, you prefer something like that where we don't even want to revisit the mean threshold? Like if you're expecting quick delivery? He said if you want to laugh. Indicate. Okay, which indicator? I mean, I have indicators on my chart. Let's see. I got 3. Estimate. Oh, you added estimate. That's corny. I mean, honestly, can't blame it. If you dig through ICT's old videos, he said himself that that's he, I guess, doesn't use them, but if you're someone that struggles with like bias or you're looking for confirmation, you can use them. So can't hate. And you for sure right about making it your own. Whatever works best for you, brother. That's what's the best thing about the concepts is once you figure out, right, I guess once you understand how price moves, you can then kind of adapt it to fit your own personality. Whatever works best. So check this right here, fractalized YouTube setup, okay? short-term high, swing low. Maybe I do get the second charts again so we could show that those little time frames. Right, short-term high cleared. You could have entered, if you had a second chart, right here is an entry, and you're already about to get out at that low. Because right, as soon as we break that low, that right there, shift, there was 100% some type of premium that was in here on a lower time frame. We use that, you get out here, right? That's that super tiny trading. But in itself, this right here also another entry because we closed below this swing point into a low. Go ahead and hit that. You little. Go ahead, go ahead. We just want to see that terminus get delivered to. Beautiful. Look at that. Instant reaction. Venture again. Again. And all right, this is such the finer details of things, but that's just kind of how I got to the point where I'm at, is when you look at these candles long enough, you can really see how they are like telling a story in a way, right? When we react off certain levels, when we hit these levels and immediately wick away. But like now, right, after doing that a few times, seeing how price tried to refuse, refused, and now if we were to actually close below that, I would expect price to continue lower. Breaker here now, right? Breakers are just failed order blocks. Order blocks that fail become breakers. Revelation. But nice, we're headed into about 4 o'clock, so it'll be good there. That final target was reached for us, which is nice. It'd have been nice to have some on into that, but all right, we messed up here. We are content with it though. Still a great day overall. Right, I guess we can run through one time. Fair value gap here, BPR as well. Right, so this down close candle, this low, should have held us, entering on that and the fair value gap. Re-entry on the volume imbalance, manually close, re-enter again on the fair value gap here. Right, creating a little fractalized YouTube setup in itself. Short-term high cleared, swing low in here, broken, fair value gap left open. We closed at an inefficiency, also 5 handles, so basically just 5 handle partial. Right, re-adding on a volume imbalance, re-adding again at a fair value gap. And as you see, right, final target would have been the low, which we deliver into, so cool. But we get out here at another 5 handle partial from the volume imbalance entry. And right, look at that reaction, just like we were saying how they tell a story. We leave a tiny, tiny fair value gap here. Perfectly aligned with the low. That's not random. Right, not random at all. We hit that, price trades into it, reacts aggressively hard away, and right, we can trade into it again. But picture everything on like, right, those fractalized time frames. We take out equal lows here. So we go from a premium, take out liquidity, equal lows. That's just kind of how I think about price when I be looking at it. Stochastics is another one. I don't even know what that. I just heard people be hating on stochastics. Is that the overbought, oversold, or that's the RSI, right? Or is it the same thing? Kind of the same thing. See, that's wild. 10 pips a day. Yeah, honestly, that's the mindset. Make your bread, get out. Because once you start trying to overtrade and just get into every fluctuation, that's when things get crazy. which I guess today was a bad example. No, it wasn't. Right, we wait for all the chaos in FOMC. Right, had no intention of even looking at this. Chop, chop, chop. People in here getting eaten up, trying to go long, short, long, short. Once we get an obvious confirmation that we are going to reach for, right, sell side, that's when we could hop on for the ride and obviously then trust setups and things like that. Cool. Yeah, we'll leave you guys with that. As far as tomorrow, let's just double check and see. $6:30 high impact news high impact news at 10 Eastern. So we'll get on just before that. So we'll let equities open play out and we'll hop on about 5 minutes before that 10 o'clock news takes place. Yeah, that sounds right. And then Friday, obviously, right? Nothing then. Nice. All right, everybody. Well, thanks for hanging out this power hour. Right, it kind of shows why we want to wait for FOMC to play out before just looking to engage. But yeah, until we talk again tomorrow morning, be safe and take care, everybody.